Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Good morning, everyone. I hope you're having a good start to your Saturday morning. I am Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial life. I'm joined in the studio today by my co-host and fellow financial professional, Jesse Hamilton.
Good morning, everybody. Welcome to the Spend Life Well Show.
All right. So grab a cup of coffee. If you're driving, pull over. We don't want you to be thinking about your money while you're driving. Well, I guess you can. I guess people can do that. But our verse for today is James 1:5. If any of you lacks wisdom, you should ask God, who gives generously to all without finding fault, and it will be given to you. So you can call us. Yeah, you can call us right here in the studio with your financial questions at 512-452-1120. That's 452-1120. Jesse, what do we have in store for our listening audience today?
Well, on today's program, as usual, we will discuss biblical stewardship and how it's foundational for financial planning. We're going to talk about how can you find a trusted advisor. It's an important part of your financial journey is finding a professional that you can work with. And we're also going to talk about the markets. They have kind of been crazy. So we'd love to hear from you. So give us a call. We can talk about the markets. And we're also going to find out what every investor needs to consider to protect your wealth.
But, we want to talk to you folks. Give us a call at 452-1120. This is a live call-in show. And a lot of stuff's been happening in the first 3 or 4 weeks of January. In fact, Jesse, I read somewhere that this, for financial markets and stock markets and stuff, this is the worst start to a new year ever.
Ever.
And in our second segment,
that seems pretty dramatic.
It is, and don't. I'll quote me on that. I was basically reading an article, and you never know. Sometimes reporters get it wrong, but that does seem like it is quite. It was quite a month. We've got one more trading day in the month of January, and then we move to February. But we'll get into that. And it was kind of a tough week, Jesse. Our clients did well.
Yes.
Because we actively manage risk and use technical analysis to do that. And we've been defensive for some time. But, from time to time, we don't get very many calls from our clients when this happens in the market because they're trained to know what we're doing on their behalf.
Yes.
And they're not worried. But I will tell you that a lot of times we get calls from new clients because they're not used to going through some pullbacks in the markets and stuff like that, and we just have to remind them of that.
That's funny, Mark. I have noticed that trend of a lot of our concerned calls do come from newer clients because they're getting accustomed to how we manage money.
Yeah. So remember, folks, you can join us by calling today's program, 512-452-1120. You can also send us an email at radio@spendlifewell.com. We'll respond to you on the show if we can, or within 24 hours. And we may even choose your question to be pulled out of our mailbag on an upcoming show.
Yeah, that would be great. You can also watch us live on Facebook. That's a great way to get connected. You can also visit our website at spendlifewell.com/radio. And that's another great way to find out what we're doing here, what's going on. And on our website, you can also find our previous broadcasts, and you can sign up for one of our upcoming webinars. And in case you were wondering, those webinars are next week. We're going to have our monthly market update You're not going to want to miss that one, especially with the tumultuous market that we're facing right now. We're going to talk about in pretty, deep terms and deep dive into what's going on and how it affects you. So you're not going to want to miss that. And then a very applicable webinar coming up on February 15th, the financial fitness checkup.
Yeah, we love doing that. We do that every year, and we'll go through a step-by-step process to help you walk through and kind of get a snapshot of your financial situation and help you set goals for 2022 of getting your house in order and also making the right financial decisions. One of the things that we really enjoy about doing the monthly webinar is we allow our listeners to ask questions, and if you've got a particular stock or mutual fund or something that you're trying to track and you're curious about, we'll pull that up on the screen live in the webinar. We'll talk a little bit about it, and we've got a lot of tools available to us to help you analyze that. We can do some of that on the radio show, but we can't show you graphs and things. So join us on that webinar. You can register by going to our website at spendlifewell.com/radio. There's a big picture of Jesse and I on that page, and there's a button there that says register for our monthly webinar. That's coming up next Saturday, which we do right after the show at 9:15 a.m.
It's going to be an interesting one for sure.
Yeah. So Jesse, today we wanted to talk about how do you find the right advisors that you can trust in your life. Now, I want to cast a bigger net here today because we're a financial show, but this really applies to any type of trusted advisor that you're looking to add. All of us need advisors. We're financial advisors, and we have financial advisors that help us because we need another set of eyes, someone that we know is also a biblical steward to help us take a look at our assumption and what we're doing. Now, we're usually, spot on for what we want to do, but from time to time, that trusted advisor of ours will help us see things that maybe we didn't see or weren't aware of or maybe didn't think of or give us a second opinion.
Right.
So Jesse, my idea here is as a trusted advisor is a facilitator in the decision-making process. Fill in your blank. We talk about financial stuff all the time, but it's a facilitator in the decision-making process using professional expertise while integrating appropriate biblical principles. And this is very important. So many advisors that are, we think they're good. So many advisors out there are giving advice and they're not integrating the appropriate biblical principles to this. And this is why we do this show, because we want to make sure that people are getting exposure to the biblical principles that give wisdom into your financial life.
Yeah, not a lot of people are doing that, Mark.
No, they're not. And that's one of the reasons that I chose many years ago to become a certified Kingdom advisor so that I could learn all the mass amount of biblical wisdom that applies to our financial life. And we kind of see in our office, and that's a certified Kingdom advisor, CKA. You can find information about that at kingdomadvisors.com. You can also find a certified Kingdom advisor in your area by going to that website and clicking on Find an Advisor. There are a number of certified Kingdom advisors in Texas and around the country. There's 3 or 4 in Austin. There's several in Dallas. And, of course, we're in those locations as well. But, that facilitator, to use a sports analogy, since we're kind of in the middle of the NFL playoffs, we just finished up the college football season, your trusted advisor is kind of like the quarterback of the team. And Jesse, you've heard me use this analogy, right? The quarterback walks up to the line of scrimmage, and the first thing they're doing is they want to make sure that the other guys on the team are in the right places, that they lined up the right way. That might be your realtor, your insurance guy, your lawyer, your accountant. Are they in the right positions? Are they, we want to make sure that they're on the line of scrimmage or off the line of scrimmage, depending on what their role is.
Well, you want to make sure that this person is extremely level-headed. And it just reminds me of an interesting graph that I saw this week. So they showed Patrick Mahomes. They showed his heart rate graph throughout a game. And surprisingly enough, his lowest, most calm moments were when he was in the huddle directing the team.
Really?
Yeah.
That's really cool. And for those of you that don't know, Patrick Mahomes is the quarterback for the Kansas City Chiefs, a native Texan from Lindale, I think.
Yeah.
And if one of my friends from Lindale is listening this morning, they can correct me if he went to some other school there. But so that facilitator is really important. And then they need to be a leader by encouraging you to implement those decisions that you've made. It doesn't do any good for us to get advice and not execute on it.
Right.
We always require our clients to update their wills or get a will and certain estate planning documents, which we'll talk about on a future show. We want them to do that in the first year because they're so critical.
It's accountability to get those things done, because
That's right.
sometimes people like to blow it off or say, I'm not old enough, or I don't have time for that.
Well, no one wants to think about dying, and that's why a lot of people don't talk about insurance or wills and estate stuff. So,
Well, just because you talk about those important things doesn't mean you're old.
That's right. That's right. So, and a third item is they're a contributor to a good advisor is a contributor to the peace of mind of clients because their goals are being accomplished. And that's just really critical because you have to stay on the course that you're moving towards. A lot of times people will get distracted. We'll have clients come in and maybe they come into a large sum of money because they, maybe a parent died, all sorts of different things. And we help them map out those goals and they have to stick to that plan. Now, things change and deviate, but most of the time you have an objective in mind. You've got a decision that you're making. And in this case, we're marching down the field and our objective is to get to the end zone, right?
Right.
And we got to make sure everybody's doing that. The other thing the advisor does is they assess all the risk. If we're using our quarterback analogy, they assess all the risk that's on the other side of the playing field, or on the other side of the line of scrimmage. Now, this is one of the fascinating things. I was a quarterback, my and different things forever, but it's amazing to see some of these teams and how they try to confuse the offense. They'll line up like they're going to blitz, and then they back off into zone coverage. They do all sorts of different things to try to throw you, and that's what the quarterback's doing is he's assessing the risk. And when you see, I think of Peyton Manning or Tom Brady or even Patrick Mahomes, they'll call an audible from the line. That's because they see a threat to the play that they call. They might even change the play there on the line of scrimmage. So one of the most important things, though, is I think that because of the wisdom of God's truths, a trusted advisor ultimately helps clients overcome economic uncertainty, such as fear of the economy or the government, maybe security in their bank accounts or their investments in things. And Jesse, we get a lot of calls.
Yes.
And a lot of it comes from people reading stuff on the internet, or they're listening to another talk show that might be conspiracy theory, black helicopter.
Or they might be using fear tactics or something.
Well, and unfortunately, a lot of folks that put themselves out there as advisors, they do a lot of that. They want to scare you. Well, a trusted advisor that's grounded in God's wisdom is not going to do that. They're going to be the type of person that lowers your blood pressure, right?
Yeah.
And you want to make sure that when you're meeting with advisors, and we're going to talk more later about, what things you need to ask those potential advisors. What is it that the questions you need to ask and stuff like that? Do they make you feel at ease, or did they raise your stress level? And that's so important. And
That's a great question to ask.
Because ultimately, go ahead, Jesse. I'm sorry.
Oh, I was just going to say that, that could be very comforting for people because their finances are such a crucial part of their well-being. Does your advisor make you feel at ease?
Right. Do they make you feel at ease? And folks, we want to hear about your experiences with advisors. And when, if you've got questions about things you need to, how do you screen? You've met with a couple of people. We get this all the time. I met with a few people, but for some reason I just don't quite understand, or maybe I'm a little uneasy about it. And a lot of times those folks will pressure you into saying, well, if you don't want to make money or you want to die poor, then, don't talk to me. And that's not right. We believe that, as advisors, we're called as, part of the Great Commission. And Jesse, I don't know if you have that open up
Yeah, I
in your
do.
Bible. Go ahead.
This is from Matthew 28:18. And Jesus came to them and said, "All authority in heaven and on earth has been given to me. Go therefore and make disciples of all nations, baptizing them in the name of the Father, the Son, and the Holy Spirit, teaching them to observe all that I have commanded you. And behold, I am with you always to the end of the age."
Folks, your advisors need to be in touch with this. They need to be extending the Great Commission. They need to be doing these things. And the way we think about biblical advice is professional competence overlaid with biblical wisdom and a good relationship. When we come back, we'll get into the markets and talk a little more about this topic. Thanks for listening to us on the Spend Life Well show. You can call us in the studio, 452-1120. And we're back. Welcome to the Spend Life Well show. I'm your host, Mark Trice, and my fellow financial professional, Jesse Hamilton.
Hello, everybody. Welcome.
And Jesse, this week was a little bit crazy week in the markets. Now, several of the indices were just slightly green this week, but not without a lot of roller coaster activity.
Right.
Take us through that.
Sure. So let's just start with the S&P 500, which is a very common index that we like to follow here. That is an index of 500 large cap stocks by weight. So that index it managed to be positive because of a rally at the end of the day on Friday. But throughout the rest of the week, it just kept falling and falling and falling. So as a general trend, we saw the S&P 500 drop, but it actually closed 0.77% positive for the week because of that rally on Friday afternoon.
And this is real important, Jesse, that we let the listeners know what this means, because we've been seeing in the S&P 500 a general downtrend. And this is really important because we use a lot of trend analysis to kind of see where the market's headed. With a general downtrend since the beginning of the year. And
sure, that's proven by the fact that it's down 7.8% on the year.
Yeah. And that's not even the worst of all the performers out there. Jesse, how did the NASDAQ do?
Yeah, even worse. So it actually had a negative week, even with the rally at the end of the week. So that's a minus 3.48 for the last week trading. And then the year to date on that is minus 11.98.
But that's not where the trend started, though. The trend
No.
the NASDAQ started really coming undone way back in November.
Yes.
Way back in November. And I think since that peak in November, Jesse, I don't remember exactly, but I want to say, didn't we say it was about 16 or 17% down?
Well, from peak to lowest point, it's actually almost 19%.
Oh, almost 19. So we're definitely, with the NASDAQ, we're in what we call correction territory. Now, this is real important to know because it's not uncommon to have a correction in the indices.
Yeah, it's pretty common.
It's very common. You might have one or two a year like that. What we generally don't see is we don't see those things happen so quickly, so fast. And this is especially concerning because, the NASDAQ, the companies on the NASDAQ and the larger cap companies of what have been driving the rise in the indices,
right,
since the COVID just started to show up on our doorstep. Now, I know you got a lot more to say, Jesse, but I'm pulling up a chart here. We can't share that on the screen just right this second, but I'm pulling up a chart of the percentage of stocks on the stock market that are trading above their 200-day moving average.
It's a pretty good health gauge.
It is. When a stock is trading above its 200-day moving average, we say that's a bullish position or a bullish stock. It's generally trending up, and that's what we like to see. We want to see those stocks trending up. Well, the percentage of stocks above the 200-day moving average ended the day Friday at only 26%. So that means that nearly 75% of all the stocks on the exchanges are trading below their 200-day moving average, meaning that they are not bullish.
Mm-hmm.
They're not bullish.
Right.
And so, Jesse, why is that important? I'll let you keep going on with your report for the week.
Well, like we talked about in previous episodes, we're seeing a lot of the performance of the indices based on a few small stocks. I say small, five or six huge stocks. We're talking trillions of dollars of market cap,
Mm-hmm.
and those stocks are really driving the quote unquote growth that we've seen over the past months and year and a half, really.
And so, that's real important. And what we've really seen is we've seen that the for example, the New York Stock Exchange, the number of new highs, number of companies that are reaching 52-week highs has been falling since last April.
Mm.
Last April. And with the things we talked about, if you didn't listen to us last week, we talked about some of the major issues that are going on in the economy right now, the intervention of the Federal Reserve, and on top of that, with them rising interest rates, they're stopping to put more liquidity in the market by preventing paring back. Tapering is the word we use.
Right.
Paring back the amount of bonds that they're buying, which has been creating liquidity, and putting more liquidity into the system, and that causes inflation. When you pump $11 trillion into our economy, you can't expect there not to be inflation. And the question is now: is the Federal Reserve too late? Are we going to continue to have rising inflation and basically more rising interest rates and stuff like
Mm-hmm.
that too? That's their only tool that they have to use to slow down inflation and fight inflation. That's raising interest rates.
Right. So let's talk about bonds for a second, Mark.
Yeah, sure.
So bonds are generally considered a safe haven, a less risky option. People use them as kind of a baseline in their portfolio, and that term that we've talked about, modern portfolio theory, really relies on bonds to be just a reliable, less risk option. But we use a certain aggregate bond tracking index, and that index is down 3.41% for the year.
Yeah. Bonds, the safe stuff, right? And this is what 95% of all financial advisors use to reduce your risk. You don't want to take as much risk in your portfolio, you add more bonds. Except for the fact that, long-term treasuries last year were down 6%. The aggregate bond index is down over 3% already year to date. And to top it off, you're seeing your stocks or your stock mutual funds in your portfolio decline.
Mm-hmm.
That's not a recipe for risk or risk management. That's a recipe for disaster. And that's one of the reasons, Jesse, that modern portfolio theory has not worked in the last decade.
Right.
And we can show you chart after chart of analysis that shows you how that is underperformed real investment advice. Those folks that are using technical analysis and active management, that has underperformed those other types of approaches to the market, and
Yes.
quite frankly, just way underperformed the indices.
Mm-hmm. Right. So part of the way that we manage money here, is by looking at the 11 sectors, right, Mark?
Right.
So, unfortunately, almost all of the sectors are struggling right now. There's one sector that's doing well, and that's energy. We've seen it just really rise up over the course of the last 3 weeks this year, and luckily, our clients are definitely interested in energy as well. But that's due to oil prices being at all-time highs, right?
Right.
And
Not all-time highs, but certainly recent highs.
Recent highs.
And the folks, the thing that alarms us is that our dear leaders in Washington, D.C., they don't seem to get it. Either because they're putting out a message out there that says, Well, inflation's here because of the greedy corporations. But you can't tell me that you pump $11 trillion into an economy that you're not going to have inflation. They're either in denial or they're trying to spin the message that this is what's happening, or they are just negligent. And I think it's probably the latter here, that they're just negligent, and we're going to continue to have inflation. We are going to see interest rates rise. And I'm not trying to alarm you, because I am a financial advisor, and Jesse and I are financial professionals that try to lower your blood pressure, but
Right.
you need to do something. And now's the time to wake up. Wake up, take control of your money, and reach out and to your trusted advisors and talk to them. If their answer to you, if you've got concerns about what's going on in the economy and your portfolio dropping, because with the indices, a lot of people are invested, especially in their 401ks, they're invested in large cap stock funds and
Very common.
large tech funds, and their portfolios are down anywhere from 7 to 15% this year. You need to check your you need to log in, because waiting on a quarterly statement, you've already missed it.
Mhm.
And we do not want this to be a year which you lose wealth because you were not paying attention.
You
And
know,
so,
from a behavioral perspective, we do hear a lot of people that say, "Oh, it's going to be bad. I just don't want to look at it right now."
oh yeah. I mean, back in the last financial crisis, I literally met with people that said, can you have you looked at your statements lately, see how things are going? These are not clients, obviously, yet, and they said, no, I can't, because if I don't open the statement, then it won't be so bad. I'm just going to bury my head in the sand like an ostrich and ignore it and hope it goes away. Well, it did eventually go away, but if you are ready for retirement, and that's what we specialize in, is getting people ready for retirement. If you're nearing the retirement airport, as we say, you don't want a lot of turbulence
Mhm.
coming in for that landing. And so many people in that time frame had to continue to working because their portfolios were cut in half. What they had worked so hard over the years to do that, to save up for, was just wiped out 50% in the span of about a year and a half. And it's because they fell asleep at the wheel. And this is not just a steal from Carrie Underwood. This is not a time that we allow Jesus to take the wheel. We have to take the wheel and pray to Jesus about, where can I get the wisdom? Where can I get the wisdom to be able to manage my portfolio, protect the things that you've entrusted me to? This is where we go back to the parable of the talents,
Mhm.
and the managers of the money, that the story there where they give him 10 talents, 5 talents, and 2 talents. And you got to make sure that you got to make sure
That's what we
that
talked
you are.
about last week,
Yeah,
right?
exactly.
So we talked about biblical stewardship last week and how uh, your finances are a critical portion of that, which is kind of what you were getting at, right, Mark?
Exactly. Because we're called to be good stewards of the wealth that God has entrusted us to. Now, Jesse, one of the things, and I don't want to put you on the spot. One of the things,
Sure.
and folks, you may not have looked at your portfolio. I encourage you to do that today. But if you've got a question about that portfolio, or maybe you got a question about what's going on in the economy, give us a call here in the studio at 452-1120, 452-1120. You can also send us an email at radio@spendlifewell.com. Or if you follow us on Facebook, you can
Drop a
listen to
comment.
us live. Yeah, type in the comments. We haven't had too many comments come in today, but you can type a comment or a question in the chat box there, and we'll just talk while we're online. So it's great to be able to do that.
Hmm.
So what one of the things that people don't realize is that the sectors themselves, and that's how we break it down. That's how we break it down a little bit, is the sectors themselves. It helps us understand what's kind of going on in the different components of the economy, and then we also look at international things, what's going on there.
Right.
Can we find anything that has momentum? But one of the things that we've been watching for the last several months is the indices have been in a general trading range. And
Yes,
this
they have.
is this is Jesse, kind of describe what a trading range is.
So a trading range is, from a technical perspective, it's just a series of parallel lines, horizontal lines that keep the stock within bounds because people don't want to break those bounds. They don't want new highs, they don't want new lows. So it just kind of comfortably goes within a roller coaster up and down within those bounds, the bounds being the previous high and the previous low.
Yeah. So think about it like as guardrails. It's not really guardrails. It's just like the market's moving sideways.
It's like when you go
And
bowling and they put the little rails up
yeah,
and the
it's
ball
bowling with
bounces
the
around.
bumpers on. You're right. That's a great analogy, Jesse. It's bowling with the bumpers on. And the markets have been doing that since really the end of the summer, that they've been moving in this sideways direction. We'd reach a new high, we'd pull back, and we kind of move in this up and down motion. Now, if you're putting your money to work at that time, you're going to experience some volatility. I don't care who you're using, you're going to experience some volatility.
Right.
And that's, when the markets start hitting all-time highs, which they did towards the end of the year, that's when we see people that are experiencing FOMO. And you know what FOMO is, Jesse, right?
Yeah, the fear of missing out. I get that
Fear
sometimes.
of missing out. That's when we get lots of calls saying, I want to invest now because I want to make some money too. And it's also typically, it can be one of the toughest times to invest, especially if you're using an advisor that just follows modern portfolio theory.
Mm-hmm.
And, when we come back from a break on the other side, Jesse, I think we'll get into that conversation a little bit more about how to find a trusted advisor. But,
That would be great.
these trading ranges are what's really tough for us as technical advisors, technical using momentum and things of that nature. We just don't see those things as good for continued growth in the market. In fact, they're just a continuation of a beginning potentially of a downtrend if it begins to roll over, which is what we've seen. We don't know where the market's going to bottom out. We don't know what's going to happen on Monday morning when the market opens. No one has a crystal ball, but you need to have a game plan, and your advisor needs to have a game plan for what you're going to do when the markets do
Right.
hit some turbulence and do have some pullbacks. We listened to the Federal Reserve Chairman Jerome Powell give his press conference on Wednesday. And at one point in the markets were up over 2, maybe 3% in the NASDAQ. And once he started talking, the market started pulling back and ended the day down, I think almost 1% in the case of the NASDAQ, or maybe the S&P was just off slightly that day. But
I mean,
that's
we had an almost 4% fluctuation intraday on Wednesday.
exactly. And we'll talk more about that when we come back. We're coming up against another break, and we want you to encourage you to call in 452-1120. And you're listening to the Spend Life Well Show. We'll be right back.
Discussions this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right, welcome back, everyone, to the Spend Life Well Show. I'm Mark Trice. I'm joined by Jesse Hamilton here in the studio.
Hello, everybody.
We're glad that you've chosen to take a few minutes and listen to us. When I was growing up, I thought that people would listen to me because I was kind of smart, not super smart in high school and stuff, but I thought people would listen to me with different things. And when I chose to become a financial advisor, it was like Bobby Buzzkill. It's like, who wants to talk about money and planning for the future and things? But you know what? We are so convicted that God has a plan for your finances. It's all there in Scripture, and that we just want to give you guidance about how to follow that and try to apply that to the craziness of our world today, so that you can feel at peace. You know what? That's all worth it. And that's why, we feel like that we are just trying to be ministers in this world of craziness and darkness, trying to help people figure out ways to help them manage their wealth in a God-loving, God-fearing, biblical way. And so we're going to talk a little bit more. You may have more questions about the market. Give us a call here at 452-1120. Jesse, do we have a question from the mailbag this last week?
Yeah, we do. I guess people are shy. They'd rather send an email to us than talk on the radio.
Yeah, we
But
do get a lot of emails, and that's great. We love those. But, you can come and talk to us. We're not going to call
yeah,
you out and say, Bob Smith from 123 Main Street.
yeah,
We keep it confidential, but we'd have a little conversation and chat with you. So give us a call, 452-1120. Jesse, what's that question for this week?
sure. So this comes from an individual named Mason.
Uh-huh.
He's from the Temple area.
Yeah.
He said, and this is a great question. We get it all the time from our clients. When is it a good idea to pay off debt with extra cash? I have about 10,000 left on the loan for my truck, and I'm thinking about paying it off soon so I don't have to make any more payments.
Okay, that's a good goal. I like that. Now, when we're thinking about paying off a debt, there's a couple of things we want to analyze, Jesse, right? So that we want to
Mhm.
know, how much is that debt costing us? The Bible says, and in fact, a lot of our show next week is going to be talking about debt.
Yeah.
The Bible talks to us about debt. It just says you want to be certain that you use debt prudently. Okay. There's scripture in Proverbs that basically says the borrower is slave to the lender, and that's true. That when we borrow for someone, we have a subservient relation to them. We're obligated to pay back for which we've agreed to borrow, and with interest, we've agreed to do that. And if we don't fulfill that obligation, then that's not wrong. Now, there's no such things as debtor prisons anymore or anything like that, but we do need to make sure that we're paying around the debts. And we love it when our clients are debt free. It is liberating for them, and it gives them freedom to do things they wanted to do. It increases their cash flow, gives them margin in their financial life, and it enables them to do greater things for the kingdom when you have margin and cash flow in your life. So, Mason, your desire to pay off the truck and pay it off early is good. You have to ask yourself, though, where's that money coming from? Now, Mason, it sounds like that he's got cash savings.
Yeah, that's what it seems like. He didn't
Yeah.
he didn't tell us where it's held right now, but let's just assume that he's sitting on some cash.
Okay. All right. So assuming he's got some cash, he wants to pay that down. We assume, Mason, that you've got a good emergency fund of 3 to 6 months of living expenses, right? And that's a baseline. If you got those things and you want to pay off that truck, then by all means go ahead and do that. Now, there are some instances where that may not be the best thing. In fact, we have these things from time to time. As folks get closer to retirement, they've worked so hard, they saved up money in their 401k, and they may have some bills left over. Like they may have a truck that they want to pay off, or maybe the house. And they ask us, should I withdraw from my retirement accounts to pay off my bills? Because I don't want any bills. It's amazing how many people, when they get to retirement, when they no longer have a paycheck, they suddenly don't want bills. And this
A lot
is
of
something you
people
got to
think retirement means security, right? That's the easy financial
right.
portion.
And folks, we see, unfortunately, a lot of folks nearing and entering retirement with a lot of debt. And sometimes we have to have conversations with them to say, no, you don't have enough cash flow. We can't generate enough cash flow from your investments in Social Security in order to pay these things off. So one time we had a client call in or come and visit with us, and they wanted to do this. They had, $30,000-$40,000 in credit card debt and maybe an auto. They had some left on their mortgage, and they
Mhm.
just wanted to pay all that stuff off. Well, the thing you have to remember is when you withdraw from a traditional 401k, a traditional IRA, you've got to pay taxes on those withdrawals. And depending on your tax bracket, you may have to withhold 25, 30% for taxes to pay that off.
That's huge.
So it is big, and that wipes out a lot more of your savings than you think. So let's just say it was $30,000, and you're in a tax bracket that is closer to 30%. That's pretty high, but a lot of our clients are in that situation. And basically, you need to withhold 30% for income tax. So in order to pay off that $30,000 note, you need to withdraw almost $43,000
Wow.
from the IRA. That's money that is not having the chance to compound and grow in your investment accounts.
With the benefits of the tax situation in the IRA.
Yeah, with the continued tax deferral. And in this case, I don't know what your note is, Mason, on your truck. And that's why if you got the cash, you got a good emergency fund, that's a goal of yours. By all means, go ahead. But if it's just your investment accounts, be very careful, because that can cause a bigger problem for you than you realize. And so it always takes more money when you're pulling out retirement accounts to pay off a bill.
We can briefly make the comparison also between the potential that cash could have invested versus sitting in a depreciating asset.
Right, because folks, we all know when you buy a vehicle, the second you drive through the gates of the parking lot of the dealership, it's going to go down in value about 30%. And vehicles tend to be depreciating assets. Now, your home is not necessarily the same way, but you have to evaluate, and you need to talk to a trusted advisor. You need to evaluate whether or not it makes sense to pay that down. Some of us have awesome interest rates on our mortgages. Some people under 3%. That's very cheap money. Thank you, Federal Reserve, who's causing problems now for us. That's very cheap money, and you have to ask yourself: do I have the potential to earn more than that in my investment accounts? And
Yeah.
how fast is that real estate itself appreciating? Because I think a lot of times, folks, Jesse, folks don't realize that. Yeah, I can pay off my house and be done with that, and that's great. And I want people to be able to do that, but you can't go down to the 7-Eleven and cash it in, right? You can't.
Right.
It's hard to
It's very
unlock the money.
liquid.
Maybe sometime, Jesse, we'll have to talk about reverse mortgages and the pitfalls with that sometime. But
Yeah.
folks, let's get back to our conversations, Jesse, about choosing that advisor.
Yeah, I've got several great questions for you, Mark, that we can lead to discussion points.
Okay, go ahead.
The first question that everybody wants to know when they meet with a prospective advisor is, how do you get paid? How does the advisor get paid?
Yeah, and I think we even go back a step further, though, is about at some point, you're going to face the limit. Should you manage this money yourself? We
Right.
meet folks. Most people are hands off. They don't want to mess with that. We're kind of biased towards suggesting that investors seek out help. But yeah, that's a common question. You should be asking these questions of any potential advisor. Number one, Jesse, I know the pay is important, but that shouldn't be the only decision that you use.
Absolutely.
You want to make sure that ideally that an advisor is paid by the client and only the client. Now, we probably need to have a conversation about, different types of ways that financial advisors get compensated.
That can get complicated.
Exactly. We prefer to be fee only. And that is that the client pays us and we provide a service. We have, anybody that joins us, we go through a 45-point checklist for retirement readiness. The majority of our clients tend to be preparing for retirement, and we take them through that. And there's a number of financial planning services that we offer and stuff. But you want to know what are the sources of that revenue? You want to know, is that advisor earning any money from anyone other than you, the investor? And you got to make sure that the answer is no. If you get a lot of, we get some here and there, that's not a fee-only type firm. And Jesse, I think there's some good follow-up questions there about, those as well.
Right. Yeah. That can cause a lot of motivation from other places. But good follow-up questions I have for you on that. Like maybe, do you earn fees from referring clients or referring to other specialists? Because we work with a lot of other professionals, tax professionals, law professionals.
Yeah, and that's a great question, because are they referring you because they're getting a kickback? And you need to ask people that. we have the potential, we could do that, but we've chosen in our practice not to do that because we want to make sure that we have a good relationship with those attorneys, insurance agents, things of that nature. We want to make sure that you are getting the best advisor for your situation.
Mm-hmm.
And so that means we don't get kickbacks. And no
Right.
other advisor should, but it happens all the time. And I think, Jesse, this is a good time maybe to get into a little bit about, what are the different types of designations, or really the status. Is someone a fiduciary, or are they adhering to a suitability standard? Now, this is real important, folks. So if you're not listening, pay attention. There are basically two different standards of care when it comes to financial professors.
Mm-hmm.
One of them is being a fiduciary. A fiduciary standard requires that an advisor put a client's interest first. And that's very important. And you can find those rules that are around the fiduciary. You can find them at the Securities and Exchange Commission. Most registered investment advisors are fiduciaries. But the other standard is a suitability standard. That suitability standard does not require the advice that you're given by an advisor to be in your best interest. Now you think, well, that's just crazy. Why would anybody want that? But that's the majority of the industry is only adheres to the suitability standard.
Mm-hmm.
They do not require that the advice that they give you to be in the client's best interest. The suitability standard only requires a broker to make recommendations that are, and for those of you watching on Facebook, I'm putting up air quotes here, suitable based on a client's personal situation.
Right.
So, I've got an example of suitability. Let's suppose you're buying a new car. All right, Jesse, you haven't bought a new car in a while.
No,
but
I haven't.
Let's pretend you're a good guy. You're going to keep that truck until it falls into the ground.
Yeah.
Let's suppose you're going to your closest car dealer. We'll pick on the Ford dealership. This is nothing against Ford at all. And you ask the dealer asks you to describe what kind of car you need. You start listing features and stuff like that. And the one you described is really a Toyota Highlander. But you can find some of what you mentioned in a Ford Explorer too. Under the suitability standard, the Ford dealer could say, a Ford Explorer sounds like a good fit. We have some of those right over here, right? And they never mentioned the fact that a Toyota Highlander more closely aligns with your needs.
Yeah, some people would go home in the Ford.
Yep. Dealer sells you a car. They earn a commission. They have recommended a car to you that is suitable for your needs, but it's not necessarily what's best for you. Now, apply that to the fiduciary standard, right? The fiduciary standard says you describe these things at the Ford dealership, and they say, it sounds like you're describing a Toyota Highlander. We don't sell those. And in order to get the car that you best fit your needs, go down the street to Toyota and ask for a Highlander. Now, the dealer might mention, hey, I've got a Ford model that's similar, but if they're putting your best interest first, they're going to say that really sounds like a Toyota Highlander, and they're down the street.
Yeah, that's a great analogy.
Yeah, and it's the same thing happens in the financial world. Financial professionals working under the suitability standard can sell you certain investments or insurance products, and they get compensated over competing options that might be a better fit for you. So it's not uncommon. It's not uncommon for that to happen. The fiduciary has to do what's in your best interest. As a fiduciary, if someone comes into us, Jesse, and this happened during one of the Gulf Wars, they come in and say, I want to buy the Iraqi dinar because we're going to turn that country around and their economy is going to take off. Now, the rationale behind that's flawed, but I can, as a fiduciary, say, that is not something that is in your best interest given your financial situation, and I can refuse to sell that. And in a suitability standard, that financial professional can just simply say, okay, you understand there's a lot of risk. Oh, yeah, but it's going to turn around. Okay, there you go. Here's your Iraqi dinars. Okay. And that's not right. We think that, people should be above board. And this is one of the reasons that we adhere to our biblical standards and why we're certified Kingdom advisors here in our office. So, but anyway, that's the difference between that and Jesse. I know you got some more there with that.
Yeah, there's just so much to this, and it just comes down to: are you happy with the service that you're getting from that financial advisor? It's definitely the number one priority is properly managing your wealth. but there's so much more to that relationship.
Exactly. I mean, this is something you're entrusting someone to help you, and they need to be much more than managing your investments. And that's why when we work with folks, especially folks that are nearing retirement, it's an intensive process. There's a lot of stuff that you have to do. And I encourage you to join us later next month, in the middle of the month. You can find that on our website at spendlifewell.com/radio.
Mm-hmm.
Our upcoming events, we're going to be talking about that financial fitness checklist and things you need to be talking about as you go along. Well, Jesse, we're getting towards the end of the show.
Yes, we
and
are.
We want to join you, God willing. Join us next week here on the Spend Life Well show. Thanks so much, guys.
Thank you so much. Bye.